All right, let's talk about something that is, for real, a game changer for so many veterans and service members, the Kentucky VA Home Loan. It's one of the most powerful benefits you can earn through your service, but wow, is it surrounded by myths and just plain wrong information. So today, our mission is to cut right through all that noise and get to the facts.
Just think about that for a second. Seriously, what if scraping together a huge down payment just wasn't a thing you had to do? Or what if you didn't need a flawless credit score to get a fantastic interest rate? Well, for those of you who are eligible, this isn't some fantasy, it's the reality of the VA loan.
So here's our game plan. First, we're going to break down what the VA loan actually is. Then, we'll get into the fun part, busting the biggest myths about qualifying. After that, we'll talk about how this is a benefit for life, look at the kinds of properties you can buy, and finally, wrap it all up to show you your advantage.
Okay, first things first. Before we can start busting any myths, we've got to be on the same page about what this benefit is at its core. This is probably the most important thing to get right. The VA itself is not lending you the money. They aren't a bank. Instead, what they do is they guarantee a piece of the loan that you get from a private lender, like a local bank or a mortgage company. That guarantee makes you a much safer bet for the lender, and that's exactly why they can offer you such amazing terms. And now for the main event. Let's dig into the financial myths, the ones that stop way too many eligible veterans from even thinking about using this benefit. Okay, this one right here is probably the biggest, most damaging myth out there. There's this idea that the whole process is a nightmare and that the rules are incredibly strict. But the truth? It's the complete opposite. The whole point of the VA loan was to be more accessible. The guidelines are written to be more flexible on purpose, to give veterans a real leg up.
And let's get into the nitty-gritty, because this is where you can really see the advantage. First off, the VA itself, they don't have a minimum credit score requirement. Now, lenders will have their own number, usually somewhere between 580 and 620, but that's often way more reachable than for other loans. Plus, you can have a higher debt-to-income ratio, meaning your total monthly debts can be up to 41% of your gross income. And in general, lenders are just more understanding if you've had a few bumps in your credit history.
The down payment. For most folks, this is the single biggest mountain to climb on the path to owning a home. So, what's the deal with the VA loan? And this slide pretty much says it all. The answer is zero. A big fat zero. For most VA loans, you are not required to put any money down. You can finance 100% of the home's value. I mean, think about that. This one thing can literally shave years off of a veteran's journey to owning a home. All right, another huge cost with regular loans is something called private mortgage insurance, or PMI. If you put down less than 20%, you have to pay this extra fee every month. So you'd think with a zero-down VA loan, there has to be some kind of catch like that, right?
Nope, wrong again. There is absolutely positively no monthly PMI on a VA loan. That can save you hundreds of dollars every single month. Now, to be totally clear, there is something called a one-time VA funding fee. This fee helps keep the program going for the next generation of veterans. But a lot of veterans are exempt from it, especially those getting VA disability. And even if you do have to pay it, you can almost always just roll it into the loan instead of paying it up front.
So we've seen how the VA loan makes it easier to get into a home. But what about the long game? So many people think this is a one-shot deal, but that's not how it works at all.
This is a huge one. Let's say you used your VA loan to buy your first house 10 years ago. Does that mean the benefit is all used up? Gone forever?
No way. This is a lifetime benefit. When you sell that house and pay off the loan, your full entitlement gets restored, and it's ready for you to use all over again. In fact, you might even be able to have more than one VA loan at the same time. It's a benefit you earn, and you can keep on using it.
So what if you're already in a home with a VA loan and you see that interest rates have dropped? Are you just stuck with your old rate?
Not at all. In fact, VA loans are some of the easiest loans to refinance. You've got two main options. The first is the Streamlined Refinance, or IRL. It's incredibly simple. It's designed just to lower your rate, and often you don't even need a new appraisal or credit check. Or if you want to pull some cash out from your home's equity, you can do a cash-out refi. The point is, you've got options.
Okay, let's zoom out a little bit. What kind of place can you actually buy with this thing? The answer might be a lot broader than you think. Yeah, the classic assumption is that the VA loan is only for buying a plain old single-family home that's already built. But what if you want to build your dream home from scratch? Or what if you want a place with some acreage?
And this is where it gets really interesting. Want to build? There's a VA construction loan for that. Found the perfect plot of land? You can buy it, as long as the plan is to build a home on it pretty much right away. You can even buy a farm. The VA doesn't really care about the barns or the fields, as long as there's a house on the property that you're going to live in. And that's really the one big rule that ties it all together. It has to be your primary residence.
Whew, okay. We have busted a lot of myths. So let's pull all these pieces together and look at the clear, undeniable advantage this benefit gives you. I mean, this chart really just lays it all out, doesn't it? 0 down payment versus 3 to 20%. No monthly mortgage insurance versus a required monthly payment. More lenient credit rules. And hey, here's one more kicker we didn't even talk about. VA loans are assumable. That means a future buyer could maybe take over your loan and your awesome interest rate. Talk about a selling point. When you see it like this, side by side, the advantage is just crystal clear.
We've covered a ton of ground, right? We've cleared away the confusion and replaced all those myths with the actual facts. So really, the only question left is the one you see right here. For all the veterans and service members who have earned this incredible benefit, knowing the truth isn't just about information, it's about opportunity. So what could it make possible for you?